Hey everyone, and welcome. So let's talk about the market because things just got really interesting. The Indian stock market literally hit an all-time high, and then almost immediately it plunged 750 points. Now, that kind of whiplash is a major red flag. So today we're going to break down exactly what's causing all this turbulence, and more importantly, how you can actually navigate.
Right. So here's the puzzle we're trying to piece together. Last week kicked off with a bang. The Nifty shot up to a brand new all-time high. But that celebration, it lasted about 15 minutes. By the end of the week, the market had fallen a massive 750 points from that peak. This kind of reversal, especially at the very top, is a classic warning shot from the market. It's basically screaming at us to pay very, very close attention.
And I've got to be honest with you, from a technical standpoint, this is exactly the kind of pattern that gets seasoned traders a bit antsy. I'm always way more scared of those big, fat red candles than anything else, especially when they show up on the weekly chart. They often mean a real shift is happening under the surface, and ignoring them, well, that can be a very expensive mistake.
Okay, so let's start by digging into the charts, because right now they're flashing a very specific warning sign. We need to talk about something I call the dangerous alert candle.
Now, this isn't just any old red candle. What we're seeing is a very specific formation. It happens when the market pushes up to a new record high, but then sellers just flood in and slam the price all the way back down, forcing it to close near the low for the week. It's a huge signal that the buyers have run out of steam. And you know what? This is the exact same pattern we saw back at the September peak, right before the market took a pretty serious tumble.
So, the big question on everyone's mind is, where's the floor? Right now, the most critical support level for the Nifty is 25,300. You should think of this as the line in the sand. If the market closes firmly below that level, especially with another one of those big red candles, that's a strong sign that the sellers have taken control. And if that line breaks, the next major safety net is way down at 24,370, which is a key long-term trend level.
Of course, these chart patterns don't happen in a vacuum, right? The weakness we're seeing on the charts is getting a huge boost from a steady stream of bad news, both here in India and from all over the world. So let's take a look at how this cloud of fear has been building.
Just look at the timeline from last week alone. On January 3rd, global tensions spiked. Then, on the 6th, a behemoth like Reliance drops almost 5%, and that puts immense pressure on the whole index. And then, to top it all off, a key U.S. court ruling on tariffs gets postponed, just leaving everyone hanging in uncertainty. It's just been one negative headline after another, creating a perfect storm for fear to take over.
And speaking of those tariffs, this is the number that really got people's attention. Just a few weeks ago, the hope was that tariffs would be reduced. Instead, the conversation has completely flipped to a potential 500% tariff. That's an absolutely massive escalation. It would act like a huge tax on businesses and consumers and could really grind economic growth to a halt.
When I saw that 500% number, my mind immediately jumped to that famous line from the classic movie Lagan, Pach Guna Lagan, which means 5 times the tax. In the movie, it was this impossible, crushing burden, and that's a perfect analogy because that's exactly how the market sees this threat right now, as a potentially crippling weight on the economy.
So with all this pressure mounting, let's see how different corners of the market are actually holding up. Because, not all indices react the same way, and their behavior can tell us a lot about where the real strength and weakness is hiding.
This chart lays it out pretty clearly. The small cap index, which is full of smaller companies, got hit the hardest, dropping 3.5%. The broader Nifty 50 fell 2.5%. But look at Bank Nifty. It only fell 1.5%. See, in a falling market, whatever falls the least is showing what we call relative strength. This is telling us that for now, investors see the banking sector as a safer harbor in the storm.
So what this tells us is that while the big banks are holding their ground relatively well, the smaller companies are way more vulnerable to this kind of panic. For the small cap index specifically, the level to watch now is its recent low of 15,800. If it breaks below that, we could see a lot more pain for smaller stocks.
Okay, so the market's weak, there's a lot of fear, I get it. But these periods of panic can also create some absolutely incredible opportunities. So now let's shift gears and walk through a simple, proactive playbook for finding some potential gems while everyone else is running for the hills.
Here's the process. It's pretty straightforward. Step 1. Go back through your notes and your watch lists from the last couple of months. Step 2. Pinpoint the stocks that had those really powerful breakouts. The ones you felt like you totally missed the boat on. Step 3 is the key. Check if this market-wide panic has pulled these great stocks back down to their original breakout price. This is your second chance to get in. And finally, step 4, create a brand new, super focused watch list with just these names.
And listen, this isn't just theory. I actually did this exact exercise myself. Stocks like M&M Finance, UPL, and City Union Bank are all perfect examples. Strong companies that had huge breakouts recently. And now, thanks to the market weakness, they're drifting back towards those key entry levels. These are precisely the kind of names you want on that special watch list.
Now, while most stocks are just getting dragged down with the tide, some are actually defying gravity. Finding these stocks that show exceptional relative strength is so important. So let's look at a case study of a stock that not only held strong, but actually staged a powerful breakout right in the middle of all this selling.
The stock is McCurr Pharma. It's a newer company, but just look at what it did last week. It burst through a key trend line at $14.97, and it did it on a really strong high-volume candle. To close strong like that when the rest of the market is in a free fall, that is a massive sign of big money buying in. The next level to watch for this one is its all-time high of $15.80, and now that $13.50 level should act as major support.
So here's the most important takeaway from all this. Having a disciplined process is everything. Whether you're hunting for stocks pulling back to a breakout level or looking for those rare stocks with relative strength, the whole strategy hinges on the overall market finding its footing. You have to remember, a rising tide lifts all boats, but a falling tide, well, it can sink even the strongest ships. Market stability is absolutely key.
And that really brings us to our final and maybe most important question. When the market gets this choppy and fear is thick in the air, what do you see? Do you focus only on the risk of prices falling further, or do you see the opportunity to buy fantastic companies at a discount? Your answer to that question will probably define your results as an investor. Thanks for joining me for this Explained.